Lordstown Motors, an American electric truck manufacturer that was once praised by former President Donald Trump for revitalizing an economically depressed town in Ohio, has filed for bankruptcy protection. The company, named after the town where it is located, submitted a Chapter 11 bankruptcy filing in Delaware and announced its intention to sell the business after failing to resolve a dispute over a promised investment from Taiwan's Foxconn. Lordstown Motors also initiated legal action against Foxconn. The Lordstown factory, previously a General Motors small car factory, caused significant distress among local workers when it closed in 2018. Trump and Ohio political leaders pressured General Motors CEO, Mary Barra, to either reverse the decision or find a buyer. General Motors eventually sold the plant to Lordstown Motors, a new entity established by the former top executive of Workhorse Group, an electric truck maker. Lordstown Motors initially claimed that it would produce 100,000 electric vehicles annually and received accolades from Trump, who praised the company and the economic growth it brought to the area. However, in the bankruptcy court complaint, Lordstown accused Foxconn of fraudulent behavior and breaking numerous promises related to a $170 million investment agreement. Foxconn had previously invested about $52.7 million in Lordstown, but allegedly failed to fulfill its commitment to purchase additional shares, and misled Lordstown regarding collaboration on vehicle development plans. Foxconn, the company best known for manufacturing Apple's iPhones, responded by stating that Lordstown breached the investment agreement when its stock price fell below $1 per share. Foxconn claimed it had been willing to engage in constructive negotiations with Lordstown, but accused the U.S. firm of reluctance to fulfill the investment agreement's terms. Foxconn suspended negotiations with Lordstown and reserved the right to pursue legal action. Lordstown's bankruptcy filing and legal action against Foxconn set the stage for a potentially contentious international business dispute that could raise scrutiny of Foxconn's electric vehicle ambitions and partnerships with other automakers. The lawsuit alleges that Foxconn consistently changed its collaboration terms with Lordstown, failing to meet funding commitments and refusing to support initiatives it had previously directed. Lordstown, established as a startup in 2018, primarily produces the Endurance electric pickup truck at the former General Motors factory. The company paused Endurance production earlier this year due to quality issues with suppliers, but has since resumed production at a reduced rate. If Lordstown fails to find a rescuer to restart full production of the Endurance, the Ohio factory could be attractive to foreign automakers seeking a quick entry into the U.S. market. Lordstown filed for bankruptcy with the intention of finding a buyer, but it currently lacks an initial offer known as a stalking horse bidder, which sets a minimum price for other potential buyers to surpass in an auction. Lordstown CEO, Edward Hightower, believes the Endurance business could be appealing to another automaker looking to quickly enter the electric vehicle market, particularly as the Biden administration aims to transition away from gasoline-powered cars. Lordstown's bankruptcy is not the first among the wave of electric vehicle startups that went public during the pandemic era. However, Lordstown gained significant attention due to its challenge to the established Detroit automaker's dominance in high-margin pickup trucks and its location in Ohio. Like other startups in the industry, such as Nikola, Lordstown has struggled to meet the lofty expectations of early investors. In 2021, the company's CEO and founder, Stephen Burns, resigned after Lordstown admitted to overstating pre-orders for its electric trucks.